a briefing. This is going to be covering our 12-month results. We've ended another financial year. Well, it officially came to an end on March 31, 2024, and we recently published and disclosed our audited financials to the market a couple of days ago. So as we normally do every single quarter, as we're doing today, we're coming to you again with another investor briefing to share the background, the analysis, the insight into our results, and of course to share the way forward as we normally do. Thank you so much for joining us. My name is Carrie Ann Stimson and I'm the Group Chief Marketing Officer here at JMMB. And it is my pleasure to moderate our discussion this morning. I just take a quick moment to introduce the two gentlemen beside me. Of course, to my left, we have our Group CEO, Keith Duncan. And to my right, we have our Group Chief Financial Officer, Patrick Ellis, and you'll be hearing from them shortly. But first, we also have a number of our team members joining us online via Zoom, and we're going to invite a couple of folks to participate in our session right now. So normally, for those of you who come to or watch our annual general meetings and certainly are part of the JMMB family, what is typical for us is that we start every meeting, every gathering with prayer and a reading from the a reading of an excerpt from our Vision of Love statement. And of course, the Vision of Love statement is a statement that as team members we would have written many years ago and still continues to inform as a guiding ethos to the kind of organization that we are, who we are, and the organization that we continue to build. So we're going to first of all open this morning's session with prayer by our very favorite, just kidding, she is my favorite, ETL, because we work so well together. But she is our Chief Strategy Officer and one of our favorite persons who we know that we can call on when we need to lift our sessions up in prayer. And so I invite her to come on now, open her mic. Claudine Tracy, our Group Chief Strategy Officer, please open this session for us in prayer. Thank you very much.
Thank you, Carrie. Good morning. Good morning, everyone. All right, let us go to God in prayer. Father, we acknowledge you as Creator, as Lord, and as King. We acknowledge you as Lord over the JMMB Group. Lord, we thank you for this day and this opportunity to share and discuss the results of our group. Lord, we thank you that even though it has been a challenging year, you have continued to be our pilot and you have navigated us safely to deliver solid returns to our shareholders and strong service to our clients. Lord, in fact, you have allowed us to overall positively contribute to all our stakeholders and all the nations that we represent in our 4 countries of operations. Lord, we ask that you will be with us in this investor briefing as we discuss the 2023-2024 performance as a group. And Lord, as we have started this new financial year, we pray that you will allow JMMB to grow from strength to strength. In your name we pray. Amen.
Amen. Thank you so much, Claudine. And now to read an excerpt from our Vision of Love statement, our CEO of JMMB Bank, Trinidad and Tobago, Sean Moses, also joining us online from Trinidad. Sean, thank you. Over to you.
Morning, everyone. The JMMB Group is clear that the organization is based on unconditional love and mutual respect. This love is expressed in ongoing day-to-day working relationships and performance. Unconditional love is expressed in every interaction and is the foundation upon which the organization rests. Love motivates the JMMB team to serve our clients, who are a very special part of our family. Team members therefore envision the JMMB Group as the premier financial institution of its kind, successful, professionally managed, with team members giving exceptional client care and striving to achieve excellence in all areas of life.
Thank you so much, Sean. Thank you so much, Sean, and thank you for joining us all the way there in Trinidad and Tobago. We welcome indeed our entire team and representation across the region. This is, of course, a live stream. It is being recorded, and if you're not able to catch the entire live session, then please catch the recording of this session on JMMB Group Jamaica's YouTube channel. And now, of course, we can now proceed into the main part of this morning's presentation, and we will be taking it into sections. Of course, as we always do, we like to start off our presentation with the context setting, as we like to call it, just to level set and give us a picture of the environment and all things that would have been happening throughout the course of the year. And then we would, of course, move into the financial presentation. So without further ado, I invite my group CEO, Keith Duncan, to start us off with the context setting portion of today's presentation.
Good morning everyone. Good morning, Kerry, and thank you very much. Your moderation duties continue to be excel at. To our group CFO, thank you, Patrick, as usual, for being here and continue to ensure that JMMB continues to report in a very accurate manner to the investing public and our shareholders and our clients. So good morning again to all who are online, to the JMMB executive team, to the investors, members of the media, the analyst community. Thank you very much for joining. So I would say over the 23-24 financial year, it proved to be one of the whole financial services sector globally had a very challenging environment. With a tight monetary policy environment across Jamaica, the Dominican Republic, to a lesser extent to Trinidad and Tobago, in the USA, the monetary policy was kept tight due to the inflationary environment that continued to persist over the year. I think many would have thought 2 years ago that inflation would have been transitionary and would have come down into the target ranges. For example, in the US, the Fed target ranges for under 2% for inflation. In Jamaica, it's 4 to 6%. And in DR, it's 4 to 6%, about 5%, right? As an average that the central bank looks for. Anyway, inflation remained above the range and continues to remain above the range in the US. And in the Dominican Republic and Jamaica, inflation has come back within the range, the target range. So what persisted is a higher for longer interest rate environment, along with tight monetary policy in terms of liquidity, tight liquidity in the markets. Of course, JMMB has been the flagship and foundation of JMMB is our investment business line, and that would have been more impacted in a negative way than other business lines within the JMMB group. So the investment business line right across Jamaica, Dominican Republic, and Trinidad would be impacted due to negative margins that or reduced margins on interest income, etc. However, what the JMMB Group has done for a period of time is to continue to diversify strategically in terms of our countries where we exist in DOMREP, Trinidad and now Barbados and Jamaica, and business lines, banking, investments, insurance brokerage, money transfer, JMMB real estate, which has become a key player for us in terms of diversification, private equity. So JMMB has continued to diversify its earnings stream, and therefore what we look for is performance from various quarters. Another major area of diversification for us was our acquisition of the Sagicor Financial Corporation of our 23% stake, current 23% stake, which has been delivering really positive returns for us. So when we look at, from a diversification perspective, we're looking across countries, we're looking across business lines, we're looking across our investment portfolio, as I just spoke to with the Sagicor Finance Group. And it really has paid off well for us in these challenging times, that JMB is able to continue to deliver significant profitability with $11.8 billion net profit result for the financial year, which is a decent number to report to the public in spite of all the challenges that we face throughout the year. Okay. I would go to do a high-level overview of the JMMB Group performance. As I said, an $11.8 billion net profit result. That is actually a return on equity of 25%. That is very decent in the current climate. A few areas that I would like to highlight because the results, while being positive, represent a mixed bag with material positive and negative results in specific areas. Let's start with the banking business line. The banking business line, while challenged with the operating environment and squeezed margins, right, continued to see compressed net interest margins, and but the banking business line, in any event, continued to deliver moderate profits in Jamaica and Trinidad and Tobago. Within the DR, we just got the commercial banking license in the last financial year, and we are in the early stages of build-out. The banking business line contributed 67% of net income for the period. The JMMB investment business line, this is where we had a struggle, and the JMMB business line in both DR and Jamaica were extremely challenged due to the tight monetary policy environment which existed. What we saw in Jamaica is the Bank of Jamaica in the market with Bank of Jamaica CDs ranging between 9 to 12% throughout the year, 30-day CDs, and that would have impacted our overall cost of funds and liability management for JMMB investment business line in Jamaica. The same occurred in the Dominican Republic, and also in Trinidad, the investment business line, due to the performance of the stock market in Trinidad and the overall impact on the fixed income market, the investment business line in Trinidad was not able to deliver profits also. So therefore, the Dominican Republic investment business line was the Puesta de Bolsa was able to deliver good profits from opportunistic trading. They were challenged with their net interest income due to the monetary policy environment in the DOMREP. Jamaica the same, but in terms of the net interest income, margins were squeezed tremendously. So the investment business line, this is where we took, was a casualty of the environment. And we have sat down as a team and we devised strategies to look to reverse and to move the JMMB investment business line across the group into profitability. And that we will speak to in a little bit. From a country perspective, the country performance, Trinidad and DR, Trinidad and the Dominican Republic were able to deliver profits for the group. However, Jamaica was pulled down by the investment business, which showed losses, which offset profits delivered by the JMMB Bank in Jamaica, fund managers, money transfer, JMMB real estate, and insurance brokerage. So the investment business line, as I said, is where we were challenged. As a result, the JMMB Group showed an operating profit marginal loss of $345 million. However, what we saw was that our diversification strategy paid rich dividends for us in terms of the Sagicor Financial Corporation performance. They would have seen a performance of over $20 billion to the bottom line of the JMMB Group, and this was significantly driven by a one-off gains on its acquisition of the Ivory Insurance Company in Canada. JMMB Group share of this, as I said, of the SFC profits are approximately $20 billion. This was reported in terms of the Ivory transaction, and that net gain was reported in our Q3 financials when we reported to the investor community. We, however, had a major impairment in our financial statements, and we would have seen a $12.6 billion impairment. This would be in the main attributed to a very early startup greenfield transaction in the energy sector, which was rated investment grade by Caracris, an allowable asset, and as a result got wide regional support from the financial sector. This investment, in spite of challenges, was able to produce, but ran into supply contract difficulties and has not been able to continue operations and service its debt obligations. JMMB has taken a prudent decision to impair this asset while the management of the energy company, in parallel with note holders, explore paths to partial or full recovery of this exposure. We believe these to be very credible paths going forward. This is a one-off impairment, and I stress it's a one-off impairment, and this will not be repeated, as JMMB is revising its investment policy statement to establish limits in relationship to capital that will ensure that JMMB will not experience losses of this magnitude from an early startup greenfield investment going forward. In JMMB Jamaica, we did rigorous work around the development of our productivity and profitability strategy. We sat down as a team and we devised a strategy to ensure that JMMB Jamaica, and specifically the JMMB investment business line, would be brought back on a profitable path, and we are now seeing the results of that work. We're in execution mode, and we're very comfortable that we're on a good path going forward with that. Okay? Well, on that note, I think I can hand over to Kerry-Ann again.
Thank you so much, Keith. And as always, we appreciate the setting of the context as a precursor to the next section of our presentation, which, as usual, will be shared by our Group Chief Financial Officer, CFO, Patrick Ellis, who will be doing the usual deep dive into the numbers. And just to acknowledge that we do have some folks joining us via Zoom, some members of the media here in Jamaica and in Trinidad and Tobago, and also members of the broker analyst community in those countries as well. Just to remind them that on Zoom we do have a Q&A button there, so please, if you have any questions, we see some coming in already. If you have any questions, feel free to drop them in that section. We anticipate that we will likely cover the answers to those questions in the presentation as we continue along, but nevertheless, please do put your questions in the Q&A window so that we can get to as many as we can when we come to that point in the briefing. So again, without further ado, Mr. Ellis, Patrick, over to you to discuss the numbers.
Thank you, Kerry, and thank you, Keith, of setting the context in relationship to our numbers. Very insightful, and which makes my job here much easier. In terms of our financial results for the financial year 23-24, as our CEO just highlighted, we posted net earnings of 11.8 billion, but clearly setting the context, we had operating revenue of 22.5 billion. That was down 4%, mainly driven by our net interest income, which was 9.2 billion, but down 2 billion as a result of the high interest rate environment that our CEO spoke to. So you would have seen when you looked at our FS financial statements that our interest income would have increased by 13%. To 40 billion. However, the increase in our interest costs with the increase in interest rates and the repricing of our liabilities, which would be much faster than the asset side of our balance sheet, would have seen our interest costs going up by 6 billion or 26%, and therefore our net interest margins would have been compressed. And our CEO spoke to the impact that would have had on our investment business line. So our net interest income would have been down by 2 billion. However, we would have mitigated that somewhat by our gains and securities trading, taking opportunity, where the opportunity arose, specifically in the Dominican Republic, through our diversification strategy, where we would have benefited from one-off gains in terms of our portfolio, yielded 5.9 billion, 2.3 billion increase. In terms of our fees and commission, that would have been flat in term and garnering approximately 3 billion in earnings. But in terms of our strategy, and we have been speaking to this consistently throughout the last 4 or 5 strategic or investor briefings in terms of our strategic direction of the group. And that is in terms of improving our other revenue streams, what we call our smart growth, looking to our off-balance sheet or other revenue lines. And you would have seen that for the financial year 23-24, the other revenues would have accounted for 37% of our revenue, which would have been up by 2% from 35% in the prior year. And it shows that while on our investment business line, on our NII would have been impacted, we're moving that revenue stream in the other revenue streams in a positive line in terms of increased revenue growth. Foreign exchange would have contributed 1.7 billion. Our revenues from our managed funds, 2.4 billion. Our cap markets giving us 680 million in a very difficult environment, and our dividend streams of 263 million, up by 37%. So it's positive trajectory for us in terms of our other revenue streams, which contributed to the 22 billion for the financial year. Our diversification strategy, very important. Our CEO would have spoken to the fact that the SFC, our investment in Sagicor Financial Company, would have paid off significantly for us for the financial year. We are the largest shareholder, the percentage being 23.62% at the end of the financial year, a slight increase of 0.3% as a result of a share buyback. It contributed 20 billion for the financial year. 4 billion of that would have been from core operations, and 16 billion in terms of the one-off acquisition from Ivory. We continue to see dividend streams, dividend flows from the entity. We garnered approximately 1 billion during the financial year, and with the acquisition and expansion of that group, we expect increased dividend flows going forward. So this strategy as part of our diversification certainly has benefited the group in a very difficult financial year. On the expense side of our book, you would have seen expenses increasing from 19.9 to 22.8 billion. And I'd like to spend some time just to break out and just to show the breakout of our costs. The increase in costs of 14%, we had some one-off costs that we would have included there on the staff cost side if we had some restructuring costs, which we would have disclosed in the financial statements of about 526 million. If you would have backed out those one-off costs, the increase year over year would have been approximately 6%, which would have been in line with inflation. On the other expense side, that would have increased approximately 1.7 billion. We had increases there, costs we generated there for about 642 million in relation to our digitization, our standardization, and our reporting platform. Our standardization project would have been completed for Jamaica, as well as our reporting platform throughout the group in terms of that project. And therefore, in terms of those, costs would not be recurring going forward. We would have incurred CapEx costs as well, so approximately 149 million in relation to those CapEx costs would have hit our expense line for the year, and that would attribute to our one-off. So some of these costs going forward, we do not expect to be recurring. and with the restructuring of our investment business line, as our CEO spoke to earlier, we would expect scale in terms of our operations going forward. Very importantly, you would have seen that we would have had provisions of approximately 12 billion relating to our impairment, significant increase year over year. We would have taken a one-off provision within the financial year for the specific asset. But when you look at, importantly, looking at our portfolio, our core portfolio, our loans portfolio throughout the group, Jamaica, Trinidad, and the Dominican Republic, from a group perspective, our non-performing NPL ratio compared to our total portfolio will be approximately 3.4%. So that shows that in terms of our core operation, it remains strong. And the growth that we're seeing in that specific in our banking business lines continues to contribute positively for the group. In terms of our total assets on balance sheet, $675 billion at the end of the financial year, a 4% growth. And we are pretty excited about that in terms of where we are generating the growth. On the loan side, we would have seen $199 billion, a 12% growth, or $20 billion during the financial year. And that growth was funded by our deposits. So our banking business line continued to move in a positive direction. On our investment business line, you would have seen some decline on our liability side, and that was strategic and deliberate, as we would have mentioned that on our NII would have been compressed and the high cost of funding. So what you would have seen is a tempering down of our repo business line, and therefore you'd have seen a corresponding reduce on our investment portfolio, with a more strategic push in terms of what we said, our smart growth, looking at our off-balance sheet, our unit trust, our collective investment scheme in generating that growth off balance sheet. And there what you do is you free up your assets on balance sheet, which gives you the opportunity for more opportunistic trading. Our diversification strategy, very important for the group, and we continue to execute. It has paid rich dividends for us. See Jamaica contributing 56% in terms of revenue, or 30 billion. The DR 11.4, Trinidad a strong 8 billion, and Barbados 4 billion. So the JMMB Group continue to be diversified across not only country, but in terms of business lines and the different segments. And what that has done and facilitated, even in an environment where our investment business line has been impacted, you see banking contributing profitability to the group. You will see SFC contributing profitability and bolstering the group where we are mitigated by other challenges. The banking business line, this is part of the key strategic thrust for us. A 10% increase in net contribution year over year. As we said, we continue to push in the banking business line and our off-balance sheet products. And going forward, we expect that trend to continue. The financial services, 31% and down 8%. And this is part of our strategic direction. The JMMB capital, our capital base continues to be strong. 55 billion at the end of the financial year. All the entities within the JMMB group continues to be adequately capitalized, and we meet all our regulatory ratios. And with that, I'll hand over with some good news. in that at our board meeting, which was held at the 19th, the board has approved a dividend payment of 25 cents per share. The notification was done to the market, formally done to the market. The record date is the 4th of July for payment date on the 12th of August. And will that good news, Kerry, I'll hand back over to you.
Thank you, Patrick. Much appreciated as always. And yes, it's always great to end on good news regarding dividends. I know our shareholders are always happy to hear that. And of course, now we move into the next section of this morning's presentation, and we are happy to have online our General Manager of Digital Services. So many of us know him already because he's one of the popular JMMB faces in the media, because digital services, all things digital, is always a hot topic. And we have him here online joining to share some more good news of all the wonderful things that we have not only put out certainly in the last quarter, but what is to come in the very, very near future, certainly within the current quarter, if not even in the next couple of weeks, right, Gifford? Gifford Rankin, our General Manager of Digital Services. Welcome, Gifford. Please share your digital updates with us.
Hi, morning, Kerry, morning, management. Morning to everybody online, press and our great clients. As Kerry said, we have some good news coming, some exciting stuff. In the last quarter, we saw the launch of our business debit card, right? This is aimed at for our business clients, right? We're our bank, our first product that really aimed for our business client, as it's a Visa card. It's really a unique payment management tool for businesses that allows them that flexibility and global access that's associated with Visa, right? Clients can now securely, reliably, and conveniently make purchases online. You can use it in person. You can also access cash, both JMD and US, from our 16 ATMs, and you can use island-wide ATMs, or when you're traveling, can access cash at any Visa-enabled ATM, right? So we're excited for that. Please contact your corporate rep, and they will definitely get that card in your hands as soon as possible, right? In this current quarter, well, at the end of the last quarter and the beginning of this quarter, we started to pilot our digital onboarding, right? This is now where we're going green, definitely saving the environment, cutting out our paper-based forms, and doing digital onboarding. We're piloting this in Jamaica and Trinidad and Tobago, and soon to start in the DR as well. So this solution allows our clients to open accounts digitally in branches, and pretty soon you'll hear the announcement Kerry's working, where you can do it in the convenience of your house. You're really just uploading your details, going through what we call electronic KYC, where we're validating everything, and it's just really much more convenient. As you can see, there's our first client who was in Maypen. She was very happy. She got through much quicker, and it just felt like a smoother process for her. So we're really excited about that, and you will be hearing about that in our in this, actually, I think either the end of this month or the beginning of next month, where we'll announce where you can now do it from home. And you can feel free to give us your feedback on that, right? That's really what we have working for you, right? Well, no, Kerry, I'm going to go ahead and speak about our mobile app 1.1. You should be seeing that release next week, where you can conveniently manage your card features. You can block your card. You can now pin your card and change your pin at home, anywhere, through our mobile app. So just look out for these changes coming soon. Back to you, Kerry.
Yes, indeed. All right. Thank you so much, Gifford. Always happy to hear from you. And I just wanted to highlight, I mean, the online onboarding, of course, is one of the things that is most highly anticipated, because it gives everyone the opportunity to open and start a relationship with JMMB from the comfort of anywhere. Once you, of course, have internet access, you can do that. And of course, with the Moneyline app that has been making waves already we are coming with a new version which will empower our clients to do a number of things And most importantly, I mean, recently we would have had feedback about giving clients the opportunity to shut down their debit card if they need to do so to prevent unauthorized usage. And of course, we're happy to be rolling that out right about soon. So we're very excited. Thank you so much, Gifford, as always, to you and the entire team who supports you in getting these things out as we continue to deliver a superior client experience in all ways as your financial partner. Thanks again, Gifford. So now we wrap up our presentation this morning with looking ahead. And as always, I will hand back over to our group CEO, Keith Duncan, to go into this final section on looking ahead and sharing with us the way forward. Sir Keith?
Thank you, Carrie-Ann. So as we look forward, we do remain optimistic. As we work through difficult environments, that is par for the course. There are economic life cycles that we have to face as a group of companies and as a financial services entity. And we continue to be proactive, not reactive. We continue to strategize, and we continue to work towards further diversification and also to continue to increase our shareholder value. So notwithstanding the environment, notwithstanding tight monetary policy and high interest rates for longer, we remain proactive in designing and executing strategies that put us on a solid footing. While we do expect that interest rates will continue to be higher for longer. However, we are seeing some positive indications in DR, where inflation is within the range. In Jamaica, inflation has been within the range for the last 3 months, from in somewhere between 5.6, the latest reading on inflation, which was for April, I believe it was at 5.2%. Also, in relationship to the US and the Fed, the Federal Reserve has indicated that there could be, and there is a high possibility of interest rates being reduced by the end of the financial year. But we do see data coming in, which in the US market around CPI, personal consumption expenditure, which shows inflation is moving in the right direction, and there are some disinflationary forces at work within the US. So we do think that while that interest rates will begin to reduce over the medium term, if not by the end of this calendar year, into the next financial year, which will be positive for all financial services globally, regionally, and in Jamaica. And we then expect that then the Bank of Jamaica would move in tandem. Also, the central bank in the Dominican Republic. So therefore, in light of that environment that we continue to face, we will be rebalancing our portfolio, looking to in this environment. Then you have higher yielding, risk-adjusted return on assets that you can acquire assets to boost your yield on your portfolios. Both on the banking side and on the investment side. You look to execute your optimal funding mix, because as JMMB has matured, and we do have our banking business line firmly in place across 3 markets, what you do is you look to increase your transactional balances, your low-cost funding, and you look to move liabilities over to fund assets which are higher yielding. And for example, in the private credit markets, where the opportunities on syndication, corporate bond issuances, and otherwise, and secondly on the loan side, where while we look to protect our clients and insulate our clients as much as possible, but the loan pricing on loans are variable, and therefore as interest rates have gone up, we have been able to make some adjustments while insulating our clients as much as possible to ensure that they remain whole and they retain their ability to service their obligations. So therefore, increasing the yield on our portfolio, both investments and on the loan side and on the private capital markets, but also managing to take down our cost of funds through our optimal funding mix. But we have to also work on our efficiency levels. As a JMMB Group grow, our whole group cost structure grew accordingly. And the one good positive about this environment is it forces us to look at and accelerate our efficiency strategies to really drive a profitable operating model. And we have done the work in terms of, and continue to do the work because this is ongoing work, because we do intend to take our group efficiencies ratios over a period of time back right into the range of around 65% over a period of time, right? Active balance sheet management, as I said, is going to be important because we have to ensure that we do ensure that our capital is allocated in a risk-adjusted way in areas that earn for us. And therefore, what you would probably see is that we'll be moving, into more stable assets and moving away from volatile investment assets going forward for the JMMB group of companies. As we go forward, we do expect that the Dominican Republic and Trinidad will continue to perform. I think they have come out of their early stages of development, save for the bank in DR, which will take some more work. But in the Dominican Republic, our Puesta de Bolsa, our securities business, our mutual funds business, our SAFI, our pension administration business, they are all profitable and will continue to grow, and there will be integration and efficiencies across the group. There is another point around efficiencies that I need to make, is that as we have grown the group, we need to standardize and centralize and to get further efficiencies. In Trinidad, we do expect that we will continue to, our profitability will continue. We expect that we will see a turnaround in the investment business line in Trinidad this year, and therefore we will expect reasonable performance out of Trinidad. For Jamaica, as I said, we have done the work, and we are repositioning into our integrated financial services model, and we'll be rolling out our financial life goal centers integrated, where we will get efficiencies. We'll be doing consolidation. We have, in our investment business line in Jamaica, we have 3 entities: the JMMB Investments, which held our primary fixed income business and a primary dealer. We had our fund managers that manages our unit trusts and other collective investment schemes. And then we had JMMB SL, which had our equity book and Cambia operations. Over time, the intention is to consolidate these entities, beginning in year 1 with fund managers, and therefore to get efficiencies from the consolidation. So we are optimistic that Jamaica, DR, Trinidad, and our overall group diversification strategy will continue to work for us. Another bright spark for us is that the SFC group, they were in Sagicor Financial Corporation was upgraded to investment grade, which has real positive impact on their ability to raise funds at much lower rates in the market than when you're not investment grade, right? And therefore they're upgraded from S&P, from BB plus to BBB. And therefore we expect that and we have seen the results of this, where they were able to issue a bond in the Canadian market at low interest rates, and also were able to match the funding that would have been for the US funding that would have been garnered for the acquisition of Ivory, and to switch that out to some extent with Canadian funding, which reduces the exchange rate risk. I'd like to really, when we made this investment in 2019, a US $250 million investment in 2019, this was an investment that was to create diversification of revenues for JMMB, and it has paid off for us. We have gotten the return and continue to see returns, and I think SFC is positioned well for the future. The insurance business line also creates a natural hedge, because the insurance business line in a tight monetary policy environment, it operates differently from the banking and investment business line, which are more impacted by tight monetary policy. So the insurance company business line, which we see manifest through our SFC acquisition, continues to provide that diversification for us. And therefore, we are pleased and we are very optimistic about the future of SFC. We are very comfortable with the leadership, management, and the governance around SFC. And we all sit on the boards, and we are very comfortable that they are moving in the right direction and will continue to accrete positively for the JMMB Group going forward. So we have, in terms of our material exposure and on our balance sheet, we have taken the prudent decision, and therefore we have cleaned up our balance sheet to give us a solid pathway forward. It would have been nice to have not been to impair that asset, but we decided to be prudent and conservative and to clean our balance sheet so that we can have a good runway to continue with our growth strategies and to deliver value to our shareholders. So thank you very much, everyone.
Thank you so much, Keith. And of course, we look forward with great expectation about the things to come as JMMB continues to deliver very credible results. And as always, holding our position as a solid financial entity that continues to not only deliver value to shareholders, but of course, continuing to deliver exceptional client care to our valued clients and the wider members of our community. All right, so we have come to the end of this morning's presentation, and we're going to move into, oops, we had something drop there, no, there's a little device there, no problem. So we're going to move into our Q&A section right now, and of course, given time limits, we are not going to be able to get to all the questions and answers. Oops, okay, let's just pick that up here. All right. Live television, folks. That's how it is. So we're good to go. All right. So yes, so we're moving into our Q&A segment. And of course, given time constraints, we won't be able to get to all of the questions we have here in our Q&A chat window via Zoom. But as always, we commit to responding to all of the questions, if not live here on this stream, but we will respond to the person respectively with a direct written response after this stream. We always commit to do that, and we will certainly do so at this time if we're not able to get through all the questions before the stream ends. So without further ado, we're going to jump into the first question here, and we're going to try and pick out what we know to be the most popular questions, because we also would have been receiving questions even before the stream began through other channels. So we're just trying to highlight those things that we believe are important and crucial to a number of folks. First question here we're going to be answering coming in from Mr. David Rose. As always, thank you for joining us, David. Happy that you are online, as you typically are. I think you missed us last time, but good to have you back this time, David. And your question, which I think is kind of an expansion of a point that Patrick would have made in the main presentation already, where you are asking here, David, what's the main reason for the group's impairment provision jumping from 1.56 billion to 12.62 billion, which I know Patrick would have covered. And you're specifically asking as well, David, was it related to a specific debt instrument such as NICON? So I'm going to hand over to Patrick, who will continue to expound on that point. Thank you.
Thanks, Kerry. Thanks, David. So I think David, our CEO, in his presentation would have clearly articulated in terms of the nature of the one-off investment. In addition to that, I think in my presentation, I tried to bring out and articulate it as well in terms of our core portfolio. If you look at our loan portfolio across all three jurisdictions, NPLs to the total loan was approximately 3.4%. We have made one-off provisions. Our numbers would have been validated by our external auditors. We have been very prudent in terms of this specific investment, and I think going forward, as our CEO highlighted, we have cleared the pathway for future growth. I know we are pursuing in terms of recovery with the respective participants, and that is as much as we can say at this time, bearing in context in terms of client confidentiality as well.
Thank you so much, Patrick. And yes, client confidentiality, but we do appreciate your question, David and Patrick, for expounding on that. I also want to acknowledge a question coming in, a couple of questions coming in from Al Edwards. Hi, Al, as usual, always good to have you online. And Al's question, or two questions, like an A and B is how I'm reading it, not necessarily related, but I'll just read them out. Despite the tight monetary policy environment, JMMB is still paying dividends, as we would have announced earlier in this stream. Is this core to your philosophy and approach to your way of doing business? And I'm going to invite Keith to speak to that for Al.
Yeah, definitely. In our annual general meetings, we would have spoken to our shareholder value proposition. And one of the key areas that are important to our shareholders is dividends. And what we would like to ensure is that we are able to provide a continuous stream of dividends to our clients and look to increase the dividend yield over time, right? That is subject, this tight monetary policy environment would create its own challenges. However, we are committed to delivering dividends to our clients on a regular cycle of dividend payments. One of the areas and one of the learnings that we have seen even from our investment in the Sagicor Finance Corporation is the disciplined dividend payout on a quarterly basis. We're not at that point yet, but we do normally pay dividends on a semi-annual basis. We will continue to review. What we know is that we were committed to paying a dividend this year based on the results that we're able to deliver in terms of $11.8 billion, which is one of the highest levels of profits that the JMMB Group has ever delivered, right? And therefore, we really wanted to ensure that we could share that. Not share, but it's really due to the shareholders, and that they are able to participate and receive a dividend payment. It is a core part of our strategy.
Thank you very much, Keith, and thank you so much, Al, for your question. Just to acknowledge that in that same question, a kind of a part B, Al was asking for an update on the asset tax situation, which Al, you would have asked, I think was, if not the last briefing, the briefing before then. No, we don't have an update for you, Al. My apologies.
No, but I would have to say, Al, you're asking the wrong person. Yes. The Minister of Finance would be the appropriate person, Al, to ask that question. We have budgeted to pay the asset tax for this year, right, Patrick?
Yes, correct.
Mm-hmm. Yes, indeed. So thank you so much, Al, again for joining and for your questions. Next question, we're going to hop back over to a question from David Rose, and I'm glad we have Donna Duncan Scott online. I'm going to introduce her shortly, but just to read this question, $526.62 million, as Patrick would have mentioned in his presentation, was recorded as restructuring costs as a one-off of JMMB GL staff costs. Is this related to redundancies in the 2024 financial year, or is it upcoming redundancies that have had provisions put aside from early or from now, is David's question. But we're going to invite Donna Duncan Scott. I know we all know her and love her. She is our group head of culture and human development. Some of us may know it as HR, but to JMMB, it's culture and human development. And Donna is going to share some insights as part of a response to David's question. Donna, welcome. Thank you for joining us online.
All right. Thank you, Carrie. You hearing me, guys?
Yes, we are. Welcome.
Great. Oh, wow. I love that picture. All right. Great. So, David, thanks for the question. And the fact is that we are in the process right now of concluding that whole exercise. It's not, we did it the JMMB way, consistent with having the best interest of all at heart and consistent with our vision of love. So, how we did the restructuring is, we looked at introducing a voluntary separation program to allow to find win-win ways in order to have the restructuring occur in terms so that we could better serve our clients, as well as to increase our resilience in terms of cost containment and all of that. Make sure that we do the what we get, the results that we get out of centralization, automation and all of that to realize that. But we did it through a voluntary separation program and alongside redundancy. And so, but we are happy to report that we have had 47 approvals of voluntary separation applicants. 47 and only one involuntary redundancy program because of one involuntary redundancy because of the approach we took. And so we're really, really happy about those results. So we're in the process of doing it. And so now we have team members are going to be able to some team members will be separating with the company. They'll be furthering their own passion, their purpose and their dreams, their entrepreneurial pursuits. And some team members will be able to now have more time to dedicate to the special needs of their family. And we're really happy about that. We're going to miss them, but we celebrate with them. And we invite our clients also, who will miss some of our frontline team members and team leaders, to really celebrate with them on this, what we think is a successful win-win-win approach to restructuring our business so that we are able to better serve the clients and deal with cost containment through automation and centralization. So the answer is it's ongoing right now. We should complete by the end of July. But it began at the end of March and will be completed at the end of July. So really happy to report those results.
Okay.
Back to you, Kerry.
Thank you so much, Donna. Thanks for joining and thanks for responding. Okay, we have another question here and regarding our real estate holdings. The question is, JMMB Real Estate Holdings is set to develop 9 Garelli Avenue and 7 Horton Avenue into a commercial complex. JMMB GL also acquired $273.26 million in investment property during the 24 financial year as well. What's the plan regarding the real estate to be developed in New Kingston? I'm going to invite Tamara Crary. Tracy. T's and Tamara's and Tracy. I call her our real estate guru to come online. She's here with us online to answer this particular question. Welcome, Trace. Tracy Ann, are you on? I don't know if is she on. Her mic is okay. Oh wow. So she's on. We see her mic is open, but we're not able to hear her for some reason. I'm not sure. Okay.
Paul Gray.
Is Paul Gray on? No. Okay. So what we'll do is, well, we know technology, folks. It is what it is. So we will continue to troubleshoot a bit with Tracy Ann and let's see how we can get that resolved so that we can answer that particular question. Okay. So there's another question here specifically about Barbados. Patrick, would you be able to support here? Let's see this question. We're excited because Barbados is the newest member of the group. We had a wonderful launch event with them a few months ago, and so we're very excited and getting our tentacles sunk into that market. It's been great. And the question that we have here is that there is a note that Barbados, sorry, scrolling slipped away there from me. I note that Barbados contributed 8% to group profits. Considering that's a recent entry, 8% is quite credible. Good stuff. Can you give reasons for this performance? Patrick, could you say?
Just one correction. The 8% in the presentation I did was revenue. The Barbados operation, it's a very important and strategic entity within the group. It does have its own prop book that generates sufficient interest income and revenue. It also strategically holds the SFC asset, which as you know, the SFC entity is listed in Canada, but it's also domiciled in Barbados. So it provides a very important strategic fit. The operational efficiency within the entity as well, I'm proud to say, is very low. And with the prop book that it has in terms of the portfolio, coupled with the Sagicor asset sitting there, it has been very beneficial for the group.
Thank you, Patrick. And yes, thank you so much for highlighting that in your question. That question was again from Al. So I'm going to ask another question now, and I'm going to invite Jerome Smalling, CEO of JMMB Bank Jamaica and head of our banking segment in the group, to answer this question. And the question is, how does JMMB Bank Jamaica specifically, given our unique environment, how does JMMB Bank Jamaica manage in the current interest rate environment based on persons saying that unsecured loans are at 32%? Jerome Smalling, CEO of JMMB Bank Jamaica, is online. Jerome, would you answer that question for us, please?
Sure. Hi, Carrie. Good morning, investors, media. So our rates range from 14.5% to 32%. So 32% mentioned in the question would be for the highest risk, and that is specific to our unsecured portfolio. We've been able to grow on pace with market while maintaining a healthy or acceptable delinquency or default ratio. And so in managing our portfolio in this environment, we have reinforced our risk-based pricing to ensure that our better clients with excellent repayment records are getting the better rates, and that the pricing reflects the higher risk that could potentially be in some of the segments that we operate.
Thank you, Jerome. Thanks for responding and thanks for joining. Now we're going to try again. Tracy, we troubleshooted a bit with Tracy and she is back on and we're hearing her. So I'm going to go back to the previous question pertaining to real estate. JMMB Real Estate Holdings is set to develop 9 Garelli Avenue and 7 Horton Avenue into a commercial complex. JMMB Group Limited also acquired $273.26 million in investment property during the 24 financial year as well. What's the plan regarding this real estate to be developed in New Kingston? Tracy, welcome.
Hi, Carrie. Hope you're hearing me now.
Yes, we are. Thanks for joining.
Yes, thanks for your patience. Good morning. Before answering the question, I think it's important to set some context since the real estate business line is pretty new. The real estate, JMMB Real Estate, it has a build and sell model. And what does that mean? It means that on completion of our commercial building, we'll either sell the building in its entirety, sell it on a floor by floor basis, or lease in the short to medium term with our eye on disposing in the long term. And as we strategically sequence and implement our development projects, we'll maintain a suitable land bank inventory, keeping our eye on the market, keeping our eye on the infrastructure build out of the country. Now, specifically to the 2 projects queried by David, we plan a multi-story office complex in New Kingston, and we'll strata that building and dispose of that one on a floor-by-floor basis. Just to tell everyone that we are very excited about this project. It's a 45,000 square foot office complex with supporting infrastructure. We have completed designs and are waiting the approvals from the relevant authorities. Our building in Ligani is complete. It's looking lovely. It is in a very ideal and prime location. It comprises of 4 office levels. JMMB will retain 1 level for its own use, and we're making plans in this regard, and you'll hear more on that. The other 3 levels we're seeking to lease. We're seeking now to identify prospective tenants, and we have received some interest and are in dialogue with some prospects in this regard. So we are on track with the rollout of our development plans, and we're very excited about this.
Thank you, Tracy. We are excited about it, and it's always great to hear what's happening. And not only are you a new business line, right, Tracy, but lots of exciting things happening. And thank you so much for answering that question. I just want to acknowledge as well that we've received a few questions about updates on the buyback program. Just to acknowledge that we will be providing an update on that in the weeks to come, so please stay tuned. And certainly remember, we have our annual general meeting coming up as well, so please join us. That will also, yes, be in person, but it will be online as well, so stay tuned, and we'll provide that update certainly by that time, and sort of go into whatever detail we need to highlight to make sure everybody has the clarity there. Well, folks, we are a little bit over time, but nonetheless, always a great conversation, and we wanted to make sure that we got to as many questions as possible. And we, again, if we didn't get a chance to get to your question, we will certainly seek to respond to you directly, provided you've submitted it here in our Q&A window. So thank you, everyone, again, for joining us for another investor briefing. Yes, indeed, it was a very good year with great results, and we are looking forward, despite the challenging environment in which we continue to navigate. We look forward to this financial year already in the what should I say, in the churn. We're wrapping up our first quarter right now, actually, as we speak, and we look forward to another year of credible performance. And thank you again to our CEO and our CFO, Sir Keith and Patrick. Much appreciated to all of our team members who joined online to answer questions and to participate. We thank you as well. To all of you watching, whether you joined us via Zoom or via our live stream on our website, we thank you for joining us. If you didn't get a chance to see the whole presentation, please, we invite you to go to JMMB Group Jamaica's YouTube page and see the entire recording there. So again, we wish everyone a very good, productive, and safe rest of the day, and we will see you again soon. Thank you.